Hello traders, Gary Wagner here just after 11 o'clock in Honolulu, 5 o'clock in New York. It is Wednesday, 12th day of June 2019, and this is the daily report for gold and silver. With the exception of platinum today, we do have the precious metals complex trading higher across the board. A nice move in gold, a respectable move in silver, and palladium moving up well over 1%. After 2 days of price declines, and Monday really being the greatest because yesterday we did have a lower low and an exaggerated low, but the market closed very near the opening price, so we didn't get much technical damage there. We have a solid up day. Apparently, this has been part and parcel due to market sentiment shifting regarding the current trade war between China and the United States and renewed concern that this could drag on a while, and if anything, these two superpowers are moving further apart from a resolution rather than closer together. Let's take a look at our current pricing. Traders, although gold is trading very much off of the highs and lows that it achieved today, it is the lows that came in the afternoon session here in the United States, but the high of 1342 occurred in trading overseas. Currently, we have August gold at 1337.20. That is a net gain of about $6 on the day. Silver tracking very, very much tepidly higher. 1476 up 2 cents on the day. Platinum trading lower by about 0.5% at 810.50. And then lastly, we'll take a look at palladium gaining $15 at 1404.20. One of the things that I do find interesting is whereas last week we saw U.S. equities and gold running in tandem to the upside, at least for today, we have dollar strength and strength in the precious metals. Let's take a look at our charts and our technical studies. So traders, interesting action in the precious metals markets. Although when we look at our daily chart, we can see that it is a small red candle, really a doji with an extended lower tail. In fact, this would actually be a variation of a pattern simply called a three-river morning star. That would be these three candles. However, it misses one critical criteria to meet the parameters needed for that pattern, and that is after a defined and extended downtrend. And we really can't say that here. The red candle, yes, is a down day, but that followed the highest trading point this year, so it is shallow at best, but nonetheless it does show the potential for support in this market. As you know, we just pulled profits on Sunday, and we are looking for the proper point to re-enter on the long side. That would still remain an effective strategy as long as we see a base or support being built at these levels and eventually a move to higher pricing. However, when I look at today, I see pros and cons. First of all, the extended or exaggerated low tells me that either they were running stops or profit taking was coming in for those that went short the market, but it reminds me very much of the shooting star we got here or the long tail that we got here. I believe those were exaggerated moves. However, I did not issue a buy signal today, and I want to explain precisely what my thought process was behind it. I really believe that the real critical area we need to see gold close above is approximately 1333. That is the 0.23% retracement level. We are using a fib retracement that's a very, very short data sequence. It only covers this leg of the rally, starting roughly, call it 1270, up to 1352. And so 38 would be the traditional area that we would look at even on a shallow correction. A deep correction might take us to a 0.618% retracement. But there is also another way to look at it, and that is if we bring in Elliott wave count. Because on our Elliott wave count, we look at this top here as a intermediate fifth, and if that's the case, we could be looking at some sort of a corrective period, such as a which terminated yesterday, a B, and if it is a B, it will go up about 60% of this decline, and then one final C before it is terminated or concluded. If that's the case, the logical point to look at would be approximately 1320. If by chance we do want to take a stab at this market before it breaks to the upside and completes an ABC, we would need to put a protective stop at least under 1320, just in case that's how this market unfolds. However, if we have that strategy, we would want to put half of our trading equity kind of to the sidelines so that if we got in roughly in this area and it did track lower, we would have additional capital to add another position at about 1320. We know this is being fueled by fundamental events, and they are heating up again with new skirmishes about China and the United States. We've got Iran still on the radar. There are a couple of things that warrant our attention. And then, of course, there's the Federal Reserve and the potential for a rate reduction. We have the G20 at the end of this month. We have an FOMC meeting next month. There's going to be a lot of events to look at closely. Let's take our time and do this right. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.